SoFi is getting cheaper every single day, it seems, with it being right around that $15.50 mark. It seems pretty attractive to me. I've been looking at it pretty heavily because a lot of people will point to it and say, that's an expensive banking stock. It's at a 25 forward price to earnings ratio, maybe even higher. When you compare it to JP Morgan Chase and Bank of America and yes, Wells Fargo, sure, it looks a little bit expensive. It's also growing 3 times faster. It's also got a very young clientele base that is expanding a lot. And I've used SoFi. I actually used it back in 2020 for the first time, and I really like the experience. So is it cheap right now? When will I be buying? We'll talk about all that. If you don't mind, hit subscribe so you can see future videos just like this. This is the first video on my phone on this channel, but I see a lot of people talking about SoFi, right? I have some friends, Tyler Hill, you might know him, or Connor Kenny, that have recently added to SoFi positions. Now, SoFi's looked really interesting to me because, hold on here, just helping out the baby here, doing a little dual task of parenting and filming videos. But it's looked really interesting to me because it's down 44% year to date. 44% year to date, and the underlying business is still strong. Now, why is that? Well, just in general, we've seen a lot of multiples outside of AI come down. So just in general, people are more cautious in the broader market with either interest rates now apparently going up. That's a possibility this year. There's a higher chance that we see interest rates go up than go down, or Iran, or whatever it is, right? People are just nervous about this market outside of AI. People are pulling money from other investments that maybe aren't growing as quickly as the semiconductor stocks, and they leave behind fintech. We've actually seen that recently with MasterCard and Visa. I talked about MasterCard in the video earlier today, how I've been buying that. That's at a similar price to earnings, maybe just slightly cheaper than something like SoFi. I think it's got less earnings potential, less growth, but also it also is a much more mature company with dividends and share buybacks, as opposed to SoFi. The one concern that I have with SoFi, something that I pay attention to with every investment, is they are diluting shareholders. They're creating a significant amount more shares every year. So yes, they are growing, they're becoming more profitable, but they're also diluting shareholders, which means you own less of the business if you're not adding to your position. So that is one thing that I am paying attention to. That's been one of the hurdles for me to get over. But I am looking at it as it continues to fall down in price. And now it's kind of, it might have stayed around the same price for the last couple of weeks, but it does seem more and more attractive. When you consider the market cap as well, all right, the market cap is $20 billion. It's just a fraction of what the major banking giants are, right? I mean, you look at JP Morgan Chase, it's closing in on $1 trillion. You look at some of the other major banks, they're hundreds of billions of dollars. Now, you can sit here and say, well, if it just gets up to JP Morgan Chase's market cap, it'll be a 40x. Maybe we can do that in 10 years, right? Some people will say that. I don't think that's a good way to approach it. Why? Well, JP Morgan Chase has been around for a very long time. It's already very profitable. It'd be very hard for SoFi to become the largest bank in the world. That doesn't mean you can't get a good return, though. But I'm not going to sit here and say that, some small car producer that no one, like most people haven't heard of, is going to dethrone the biggest car companies in the world. Like, I'm not going to sit here and say that this smaller company is going to dethrone the most profitable businesses. But what I am saying is, if they continue to grow at this rate, it's not going to seem like a wild thing that they're at $100 billion market cap years down the line. They're still growing very quickly. They're growing revenue at 28% over the last year, but they're starting to inflect where they're focusing a bit more on profitability. They're actually showing profitability now, so that is really beneficial to the stock, because you do want growth, and a lot of the time when you focus on profitability, you don't get as much growth. But also, people that buy banking stocks just in general, they want profitability, they want share buybacks, they want dividends, they want to see that. And if there's no profitability, then there's no share buybacks, there's no dividends. So when that happens, when SoFi continues to grow to the point where they can start showing a significant amount of profitability and they can still grow at 20% a year, that is going to be where I think we see a massive inflow, a massive amount of buying pressure. And why is that? Well, there are some people that just won't buy SoFi, being that it's a stock that does dilute shareholders. They don't pay dividends, right? So a lot of the time you might need to get it a little bit more mature. The company will have to grow a little bit. And then you'll have a new investor class that comes in that has never bought SoFi before, that's never even considered it. But we can still go up in the meantime. That is where I think we could see a massive inflow, but I think SoFi could still do well before that. Why? Well, they're still growing significantly. There have been headwinds, and they're still growing revenue. They're still growing profitability. Like, the fact that we've had this higher interest rate environment for a long time does not benefit SoFi. It makes people a lot less likely to refinance and to get new loans and that kind of thing. We have had a good time for crypto, minus this year, right? But 2024, 2025 was good for crypto. I actually signed up for SoFi, I think at first to reconsolidate a loan. And then I signed up and referred a bunch of other people because they were giving out like $100 or $200 per referral. And I referred like 14 people. I think I was one away from the max that you could hit. And I like the platform, right? I've liked it for years, and I think it's very smooth. I think they have a good user experience. And yeah, this is a company that I would be interested in adding to my portfolio. There are a couple things I'm looking for. Now, if it continues to fall down, if it gets into that 14 range, it looks really attractive. I mean, it already looks attractive now, but there are other deals that I think maybe look a little bit more attractive. Some of the companies I've talked about so far on the channel, I have major exposure to the major hyperscalers like Google, Amazon, Meta, Microsoft. That is probably 70% of my individual stock portfolio, those 4 holdings. That being said, there's a very possible situation here where SoFi gets cheap enough that I need to add a position. What I've been looking at is selling some cash secured puts. So basically that allows you to say, I will buy at this price at some point in the future. If it's below this price, I'll buy it. If it's above it, then I don't have to buy it. And I get paid a premium for agreeing to that contract. Now, SoFi is a pretty volatile stock. There's a lot of trading volume on it. So it is one that has pretty great premiums if you're selling cash secured puts. Now, you might be wondering, why is this up in the background? We have a bird that continues to peck at our windows, and apparently it's a little bit better if we open up the window. So apologize for that. You're seeing my underdeck here. But yeah, I hope you're all doing well. Let me know your thoughts on SoFi right now. It does look attractive. I have been considering it. I don't think it's expensive. With it coming down weight like significantly, I think it was a little bit expensive before, which is easy to say when it's fallen. But also that's part of the reason I haven't bought it. Right? It was at a 50 forward price to earnings ratio. Now it's at 25. Right? So I think it's looking much more attractive. Let me know your thoughts though underneath the video. I think it'll be an interesting time over the next couple months, seeing if it continues to just stay where it is. Because remember, if the stock price stays sideways and the underlying business is getting better, that stock is getting cheaper. Whether the actual share price shows it or not, the company itself is getting cheaper compared to how profitable they are. So every day it stays at the same price, it's more attractive. Let me know your thoughts though underneath the video. I really do appreciate it, and I'll see you in the next one. Bye.